Positive global cues helped Dalal Street snap its 5-day losing streak. The Nifty and the sensex end over 0.5% higher, but the Nifty remains below its 200-day moving average. The markets to remain open on Saturday, 1st of February, the day of the budget.
The Directorate General of Trade Remedies notifies that the initiation of an investigation into flat steel imports following representations by the industry. The move raises hopes of import duties being imposed to curb the inflows of cheap steel from China. Steel stocks rally.
India's competition watchdog clears UltraTech's purchase of close to 33% stake in India Cements. This paves the way for an open offer by UltraTech at 390 rupees per share, which is at a significant premium to India Cement's current price. Hello and welcome to Markets Forward, your go-to show where we'll aim to get you all the key data points to gear you up for the next trading day. It's the Santa Claus week. I am Reema Tendulkar. With me is Vinny Motiwala. Hi, Vinny.
Hi, Reema. An interesting day, Santa Claus week, and hoping that we see that Santa rally finally coming in, right?
I know, indeed. It was Santa Claus derailed. Was the rally derailed or was it just delayed? But finally, after 5 days...
Maybe he was stuck in the chimney while distributing his gifts.
But finally, after 5 days of reeling under intense losses, there was a little bit of a green on the screen today. So markets rebounded, and they rebounded not just in India, but even across the Asian markets. Last week, the Nifty lost nearly 1,200 points at the index level Friday to Friday. Today, we managed to recoup 165 points. The only thing is we closed a little more than 130 points off from the session highs. And also, despite having about a 0.6, 0.7% surge on the frontline indices, the advanced decline ratio closed in favor of the number of stocks declining. So that was a bit disappointing. The advanced decline ratio was at 2:3. The mid-cap index managed a positive close, but the small-cap index, both BSE small-cap and the Nifty small-cap index, was under pressure. Sectorally, metals, realty, banks, these were the leading sectors, and you had support coming in from large caps like HDFC Bank, Reliance Industries, ITC. These were some of the notable, frontline stocks providing that support to the index. But let's also tell you what we have for you on our show today. The top movers and shakers of the day. The stock of the day was UltraTech Cement. Vivek will join in to give us the key reasons why UltraTech Cement and India Cement was buzzing in trade. And we'll delve into the key market events to watch for tomorrow. But first up, it's over to Vivek now. He's at the big wall with the top stock movers.
Well, thank you so much for that. Again, a day where you did see a bit of a rebound coming in after the kind of brutal sell-off that we saw on Friday. First up, we have to talk about the metal name, something that you alluded to earlier. Hopes of an import duty coming in, and on the back of that, the entire pack did very well in the session, despite the kind of negative news flow that came in as far as Karnataka was concerned. SAIL, JSPL, JSW Steel amongst the top gainers in trade today. The other stock on the radar, is Amber Enterprises. Amber Enterprises, this particular stock, especially as far as the broader end of the market was concerned, did very well on very good volumes. Over 11.5% was the kind of move that Amber saw today. On the other hand, have a look at Indigo as well. After a while, you did see an upgrade coming in on this particular name. Elara Capital went in and double upgraded the stock to buy rating from a sell earlier. Cooled off a little bit in the last half hour of the session, but again managed to end in the green. Intellect Design Arena, this particular stock, the top gainer as far as the NSE 500 was concerned today. Very strong volumes, almost over 17% higher. But on the other hand, when you're looking at the IT pack, selling pressure persisted over there. Friday, you did see some selling pressure in the IT pack. Today, that particular pain came, especially as far as the mid-cap IT names were concerned. Look at names like LTI, Mindtree, L&T, Tech Services, Birla. So all of them closed with cuts today. Also look at, reinsurer, NIACL, National Insurance. That particular stock too down significantly amongst the top laggards as far as the NSE 500 was concerned. NIACL. Also have a look at Nykaa. It's a recent entrant as far as the F&O space is concerned. That saw significant selling pressure throughout the trading session. And lastly, Canfin Homes, select NBFC stocks continue to see pain and continue to see selling pressure today.
Okay, thank you so much for that, Vivek. Those were the top stock movers in trade. But let's get across to our guests who are joining in with us. And we have Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, and Jay Thakkar, Head of Derivative Research at ICICI Securities, joining in with us. Thank you so much, gentlemen, for joining in with us as always. Sudeep, I'm trying to understand a quick look in terms of the market. What are we watching out for, especially in terms of the IT sector? If we look at it today, a bit under pressure. Is that something that we should be watching out for?
Positive on IT sector. I think Trump administration will be good for Indian IT. They believe in US first. A lot of activity will happen in US, and that will create further opportunities for Indian IT companies, which most of them have a significant presence in US. So the order book will grow, margins will improve, and I think a little bit of challenge on H-1B, which they will have to navigate, and they have done it during the earlier Trump administration. So I'm not too perturbed with that. I strongly believe that Indian IT will have a good next 3-4 years. So there's no need to get perturbed with intraday volatility or a short-term volatility. If you look at medium to long term, I think Indian IT is going to do well. Especially focus on companies having exposure in BFSI, manufacturing, and a lot of these Indian IT companies do have in US BFSI and US manufacturing. So they will do well.
Okay. Will do well in the medium term is what we're watching out for. But let's move on. And the India competition watchdog gives the green signal for UltraTech Cement's acquisition of India Cement. Vivek Iyer is joining in with us to give us details on this one. And India Cement was passing in trade as well. Vivek.
Well, that's right. One of the top movers as far as the broader end of the markets, of course, was India Cements today. Now, remember, earlier in December, you did see CCI, the Competition Commission of India, actually go ahead and express some reservations to go ahead and give the nod as far as UltraTech's acquisition of India Cements was concerned. However, both the companies have managed to assuage the watchdog's concerns, and post-market hours on Friday, both of the companies informed the exchanges that they have received the CCI approval. Remember, this makes UltraTech Cement and the Birla Group a very large entity as far as the South Indian cement market is concerned. What are the contours of this particular deal? First up, the Birla Group or UltraTech Cement will acquire close to 32.7% shares of India Cements. This was held by the promoter as well as the promoter group entities. Post that, there will be an open offer for an additional 26% that UltraTech has announced. This is from the minority shareholders or the public shareholders. That particular price is at close to 390 rupees a share. So again, India Cements as well as UltraTech Cement, on the back of the nod coming in from CCI, both of these stocks did very well in the session today.
Thank you. UltraTech was up just 0.5%, but India Cement is where you had those big gains, 8% higher by close, 366 rupees on India Cement. Open offer price, 390. Sudeep, is there upside in India Cements beyond the open offer price of 390, or does it get capped here?
Well, I think it does get capped there. Probably it will get capped, shaped below 390, because it's not that all the shares will be accepted. It's 26% offer. So I would assume that one more days of rally is what we will see in Indian Cements. After that, it will kind of start moving sideways.
Trade or investing opportunity, at least for now, in India Cements. But moving on now to steel sector, soared in trade after the DGTR has recommended a safeguard investigation. It's just an investigation as of now on steel imports. Sudarshan is here with the details. Sudarshan.
So most of the metal stocks today closed higher in the trade after DGTR issued notification saying that it will investigate safeguard on imports of steel flat products from China. So is it a done deal? No, it has a 4-stage. First, these companies approached DGTR for investigation. So DGTR has come out and said that it will investigate, but it has 2 more stages left. In the 3rd stage, DGTR will recommend safeguard duty if it finds that yes, the imports are hurting the industry. In the final stage, it will go to Finance Ministry. Finance Ministry will be the one who will take the final call if safeguard duty is needed. But today, most of the stocks were higher based on the news of DGTR issuing the notification regarding investigation.
Okay, thank you so much for that, Sudarshan. Jay, coming to you in terms of steel stocks, anything that you are looking at or you find exciting as of now? We've seen some of these names run up today in trade, but what is your outlook here?
Hi, very good afternoon to you, Vinny and Rima. I would say that the entire metal bag had a very good day in today's trading session. And as far as the metal index is concerned, I believe that 8,700 now in the short term appears to be a very good support until those levels are held. The probability of Nifty metal index bouncing back to 94 to 9,500 is quite high. Also, depending on the way the DXY has now reversed from the high levels, I think if that continues and if it is unable to surpass the levels of 108, 209 zone, then it would further help the index to bounce back from the current levels. As far as the steel stocks are concerned, then as a disclaimer, I would like to say that we have a buy recommendation on Steel Authority of India sale, targeting around say 140, 150 at least in the short term. That's a technical pick. As far as Techno Funda pick is concerned, we have a bullish recommendation on JSW Steel, and we expect it at least to move beyond the levels of 1,000 going forward in the short term. So these are the two stocks which we like as far as the steel stocks are concerned. And I think one more stock which I can add from here on is Jindal Steel, which has been consolidating, very within a band of say 1,040 to 900, and it has just reversed from the lower end of the range. So along with SAIL and JSW Steel, wherein we have recommended those to our clients as well, I think JSPL also has a very good chance or a high probability of inching towards 1,000 to 1,040 levels.
Sure, okay, keeping an eye out over there. But let's move on. Sterling and Wilson rallied over 5% after the company won a new set of orders. Vivek is back with us to tell us more on this one. Vivek?
Well, that's right. So Sterling and Wilson Renewable Energy is the stock in focus. Now, what the company announced was that the company said that they received orders worth 1,200 crore. This is for a 500 megawatt balance of system project in the state of Gujarat. Along with that, the company also received an O&M contract for the same project, and this is for a period of 3 years. Now, remember, with this particular project win that the company has received after a lean H1, the company's YTD order inflow now stands quite strong at 5,920 crore. The current order book is at close to 12,250 crore. Remember, at the end of FY24, the order book was just around a little over 8,000 crore. So the order book growth has been quite steady. Now, all that depends on the kind of execution that we see, and also the company is awaiting certain large orders which still hasn't fructified. So Sterling and Wilson did quite well in the session after a period of long underperformance.
Thank you very much for that. Sudeep, getting back to steel stocks, is there a tactical play in steel stocks? Some of the guests that we were talking to said it's wise to look at metals, but just purely from a tactical point of view.
Yes, of course. The imposition of a duty is definitely in the offing, and that will help Indian steel industry. So yes, there is a short-term play as far as Indian steel stocks are concerned. Whether the length of the safeguard duty will be 4 years or shorter is a matter of speculation, and we have to see where it falls. But as things stand today, I think Indian steel industry is desperately needing that relief, and probably that is going to come sooner than later. So obviously there is a play, but it's a short-term window, and stocks already have moved up to an extent. If you want to play safe, I would prefer Tata Steel. Other stocks have already rallied based on this expectation of this duty coming in.
Okay, Jay, what's your view coming in on Sterling and Wilson? Obviously, today there was a specific reason and news flow around it that, we saw the stock jump up in trade. But other than that, Sterling and Wilson in the last 1 year, we've not seen much of a performance. So what is the outlook that you have on Sterling and Wilson?
Well, as far as the stock is concerned, as you rightly said, that we haven't seen much of, the kind of a move coming in this stock, and it's been consolidating now since long within a range. I would say, a breakout technically is really required in this kind of a stock, to actually provide that kind of a momentum on the upside. And I believe that going forward, at least 485 to 90 range is something which it really needs to take off on a closing basis. If it manages to do so, then yes, we can see an upside, until 550 plus levels going forward. Else, the consolidation might just continue within the band of say 485 on the upside to say around 400 on the lower side. A breakout on the upside could definitely get it inch higher towards the levels of 550 plus levels. The momentum is showing the positive divergence, hence there is a very high possibility of the same.
Sudeep, we're all looking forward now to 2025 as we count down to this year. And two of the biggest losers on the Nifty, the first one is IndusInd Bank, 40% down, and Asian Paints, which has declined 33%. Would you be a buyer in these two beaten down large caps?
Well, I'll wait and watch. Both have come down because of different reasons. IndusInd Bank, of course, because there is a significant pressure on their unsecured microfinance portfolio. And that pressure is real. Pretty much all the microfinance portfolios across the segments, whether it's a small finance bank, whether it's a universal bank, whether it's microfinance companies, standalone microfinance companies are under pressure. And the asset quality improvement is going to take some time. So yes, IndusInd Bank will wait and watch. It's a well-managed bank. The balance sheet is clean. but the asset quality pressure is real, so I'll wait and watch. As far as Asian Paints is concerned, it's a fantastic company. They've done well, rewarded shareholders, but the launch of Birla Opus has definitely brought competition of a different magnitude altogether. And market share loss, again, is real. It's not that Asian Paints will crumble or something bad will happen, but the fact is that they are losing market share. There is intense competition. So at this stage, again, I'll wait and watch. Let things play out in the market for some more time before I recommend a buy in either of these two stocks.
Jay, do the charts tell you there is more downside in store for IndusInd or Asian Paints?
Well, Rima, I would say that, see, these are the two stocks wherein we can see a good sharp short covering. The reason being, Rima, the data which I would like to share, recently we have come out with a yearly quant report as well of ICICI Direct, and there is wherein we see that there is the highest, open interest as far as Asian Paints is concerned. I mean, the stock is down almost, as of Friday's data, 21% from the top. And we have seen the increase in the open interest by almost 100%, Rima. That's the highest among all the F&O stocks which you have seen. And this is the data of past 3 months. So I think it's too oversold. We have seen huge shorts in Asian Paints, and selling it from here, the risk reward is not favorable. Rather, one should be looking at this stock from the short covering point of view. That's point one. And as far as IndusInd Bank is concerned, Rima, out of all the F&O stocks, this is the stock number 2, wherein the OI is up by 92%. And the stock is down by almost 34%. So here too, the risk reward is not favorable on the short side. Rather, one should be looking at this from the short covering point of view. So these are the two stocks, rank 1 and 2 as far as the F&O stocks are concerned, wherein there has been highest addition in the OI, and there has been a good amount of decline in the prices as well.
Okay, thank you so much, Sudeep as well as Jay for joining with us as always on the show. It's a pleasure having you on the show. But with that, it's time to slip into a very short break. We'll get you the top corporate voices along with key market events to watch out for on the other side. Welcome back to Markets Forward on CNBC-TV18. And now to the corporate corner. The management of Kalyani Steel told CNBC-TV18 that the industry is finding it difficult to increase steel prices due to the dumping of Chinese steel products. Adds that the actual impact of Karnataka duty increase would be large and would need to take price hikes by 4% to assimilate the impact. For the company, the management doesn't expect any growth in terms of revenue for volumes or in terms for FY25. Now let's move on from steel to healthcare. The management of Metropolis Healthcare told CNBC-TV18 that the price hike in 2025 will not be as high as 2024. The diagnostic company continues to build its market share in North and East India, adds its volume is better than peers at 8 to 9%. Further, the company will expand to 1,000 cities from a present 700 cities.
Next up on the list is another diagnostic firm and the new kid on the block, Suraksha Diagnostic. The management is guiding for FY25 revenues of 270 crore rupees with margins at 38%. Finally, the management of Unimeg Aerospace, who is also on the show. Remember, the company's IPO opened for subscription today, fully subscribed on day one. Now, the company said that the money raised will be used to fund their capex, working capital, and towards debt repayment. The company is also likely to see a 2 to 2.5 times jump in the monthly revenue in 12 to 15 months after the capex comes on stream.
And it's time to bring you some market opinion. How will Indian markets perform in 2025 and what will be the top stocks and sectors to look out for in 2025? Take a look at what they have to say.
We're far more optimistic on telecom and IT compared to the benchmark. We're a bit more optimistic on healthcare as a space. We end up being neutral on financials. We end up being meaningfully negative on consumer, right? That's kind of a key underweight here for us. Industrials is about kind of in line. So that's kind of the broad kind of flavor of kind of how we are positioned. We still think that the first half government capex kind of slowdown was more a blip. So we're still behind the theme in full. But I think it's more that bottom-up list again is more in terms of what's already in expectations and where there is a bit of upside in the multiple. L&T does feature in that list of kind of or within our top, say, 15 odd stocks in there. And that's more, but the proxy again is more about the confidence of the theme than it being about earnings being revised upward.
What can turn the tide is that if India manages the Trump presidency well, India is one of the few countries which, besides the US and China, is entirely domestic driven. But for the first time, I would say, the way the world is positioned, the US is actually pivoting in a major way.
Okay, and finally, let's get to the key market events to watch out for tomorrow. Sudarshan.
So while our market is open tomorrow, most of the global markets are either shut or closing early ahead of Christmas. But there will be some economic data that might be in the focus. First one, Japan. From Japan, we'll have BOJ policy minutes. Second, we'll have Bank of Japan core CPI data, and last would be US new home sales. On the domestic front, Vedanta will be in focus at it will go ex dividend of rupees 8.50 per share. Also, there will be some allocation of IPO shares, and names are first DAM Capital, second is Translate Lighting, third Sanatan Textiles, Mamta Machinery, and Concord Enviro. So these are some of the events that will be in focus tomorrow.
Okay, Sudarshan, thank you so much for that in terms of events to watch out for tomorrow. But with that, it's a wrap on this edition of Market Forward on CNBC TV18. Thank you so much for tuning in. It's a goodbye from Rima, myself, as well as the team who put this show together.